You're back on the front page, 94.7 The Pulse. Interest rates went up again. There's a lot more despair in the community with a lot of households that are under extraordinary pressure already. There's a gentleman who's been on this show before. He's going to help us through some tips to fix it and how you might be able to alleviate some of the pain. Chris Foster-Ramsay, good morning and welcome to The Pulse.
Oh, hi, Rob. Thanks for having me on.
Yeah, it's good to have you back again. I enjoy these conversations because a lot of people will be out there feeling the pinch a little bit, and sadly, again, we look at what we see on face value as the reason for the problem with inflation, and we're paying lots for fuel, we're paying lots for groceries, we're paying lots for everything at ground-based level, and someone is telling us we've got to stop spending, but most of the things that are going up are things that we can't do without, Chris. How do we manage this silly spiral?
Yeah, someone said to me the other day, Chris, we've tried to cut our costs and we're at the point where there's no cost left. What do we do? I think, it depends. You can really drill down, and that's quite a large umbrella term. I think you can drill down into, for example, buying with grocery, buying things on special, buying things on bulk, buying things with other families to reduce the cost. Or you could look at, utilities, where, it's just about ringing around to get a better deal and using perhaps the compare websites. And in terms of lending, it's as much about speaking with your lender or broker on a regular basis to make sure that you are on the best rate and that product is, still right for you. And that becomes so important. There are occasions where people come to us and they haven't had that done for a while, pre-COVID. And there's an instant saving in many cases that we can access just by asking the question.
Chris, that's a very important place to start. And having had a bit of experience in the banking industry myself, I think it's important to, and I hope you agree, I'm going into interesting territory here, but the first conversation should be had with your current provider rather than going around and looking at other options, because I suppose it's much easier if you already have a relationship and you are struggling that provider may be able to come up with the answers rather than having to go and basically hawk your loan around to others to try and find the best option. Is that your advice as an initial starting point?
Oh yeah, and that's what I'm not. Just to be clear here, I'm not talking about moving services or loans around at all. I'm actually talking about exactly that: ringing your current provider and saying, "Is this the best deal that we can be on at the moment with your service?"
Yeah.
Otherwise, we're happy to move, but we don't want to. We like the service, we like the whatever it is. But yeah, no, I certainly do not advocate for picking things up and moving them around just for the sake of it. It's about having what's known as a retention conversation with the current provider to make sure that you are on the best possible rate.
Yeah, I think some people are, whether it's embarrassed, is certainly a case in some situations. They're embarrassed to talk to their provider about the change. They feel that they might have a negative vibe, but if they go off and put their circumstances to a new provider, they'll be treated in a friendly, happy manner. That is in the back of people's minds, but I think the reality is your current provider is always the best place to start, and they should, particularly in this environment, be very open and happy to accommodate as best they can.
Yeah, and they are. From all reports that we're getting, particularly in our space, the home loan space, they are absolutely very happy to do the best that they can do and will bend over backwards 99% of the time to retain your business if you're unhappy or you feel like you're paying too much. So I completely, concur that it is a hard conversation to have if you're not used to having the conversations. And it doesn't have to be that hard. It just needs to be, oh, hi, Rob, I've got a home loan with you. I haven't had it reviewed for a while. My friend has told me that they've got a rate of X, Y, Z. Is there any chance that we can have that rate on our loan because we've paid so well? Our payment history is really good. We're making repayments regularly and we haven't missed one forever, so we think we're a really good borrower. Can you tell me whether that would be applicable to our circumstances?
And that, in a nutshell, is the perfect way to have the conversation. So clearly the experience that you bring, it is simple. So people out there, if you are worried about having it, it really is just as simple as Chris said, because if you tick all those boxes, you deserve to be in that bank, and you deserve to be looked after, and I'm sure that they will listen very carefully. Chris, there's some other stories. When we spoke last, we were talking about ideas that you could save the budget a little to help that $70 a month increase, whatever it is, on your loan that has come previously. I guess if you have lots of conversations with lots of customers, you probably are continuing to find new and wonderful ideas that you can save a $20 here or $30 there each week to take a lot of pressure off your budget. Yeah,
the ones that we're sort of coming across at the moment are around the credit card points, flyby points, etc., being converted into shopping dollars, like gift cards. That seems to be quite popular. If they're just points sitting there and you don't plan to go on a holiday for a long time, or you'd rather use your frequent flyer points for holidays. Granted, there's another separate argument about how much those points are in cash. But what you can do, if you have a heap of points that you're not planning to use or don't know what to do with, you can convert them into gift cards. And those gift cards, in some cases, are paying for a half or a full weekly family shop. So that's probably the zaniest way that we've been able to find since we last spoke about how to use that sort of stuff.
Yeah, and there's sometimes a simple, hard decisions of what you want in your life as opposed to what you need. And the simple analogy I've come up with is people in their workplace may at some stage during the day have a cup of takeaway coffee at $5. If you decide to not do that because you don't really need it, that's 5 5s is 25 times 4 weeks. That's $100 a month that can be saved simply by taking that little bit of a luxury out your life. Sometimes a hard decision, but at the end of the day, do you really need a second cup of coffee a day to get through? I suppose those sorts of decisions have to be made as well.
Yeah, they do, and it's sort of the cafe versus the Nescafe 43, isn't it? Really, I mean, it's does it actually need to happen? And certainly, we're also seeing that as well with the desired items that used to be very popular, discretionary spending type items are falling away. And that's sort of in line with what's going on at the moment. But the point I'd probably make just outside of this and just touch on very briefly is that the price of money now, yes, it's high, but I don't believe that, and history would tell us that it's not going to be this high forever. So, it just may be a matter of short-term pain for, a little bit of relief in I hope within the next 12 months. But it's certainly, everything's going up, yes, but it's not going to be going up forever.
Chris, it's an odd time of the year too for a rise like this. We're just on the eve of Christmas, but post Christmas there's holidays, but there's back to school, and there's lots of expenses that are not avoidable. Some of the Christmas spending is avoidable, but you want to do the right thing by your family, your children in particular. You want to make sure that the gift that they get is something that they'll appreciate. That sort of tough decision making also, some parents might need to really sit down and budget hard around that December, January spending.
Yeah, that's right, and that's also something that we see that, when the budget is revisited, many are revisiting the budget again at the moment after Tuesday. That there are things there that are maybes that are becoming non-purchases, which is unfortunate. But I think everyone understands in the circumstances, and there are plenty of sort of word tracks, as I was talking about before, to have with your bank. Similar things for having those types of conversations with kids around, what Christmas may look like this year and what Christmas holidays may look like. So, I'd encourage people to use those as well.
Chris had an interesting experience, just travelled to Perth and back, and a lot of fuel gets used on a trip like that, and we found ourselves being very conscious and found this little app about fuel stations and prices, and it's quite amazing the difference within a very small location being on a main drag or off onto the side of how much difference there is in the price of fuel, sometimes up to 10 cents a litre less than a kilometre away. If you're using a lot of fuel in your family budget or work-related expenses, a lot of money can be saved there just by shopping around a little and getting this little app to find out where fuel can be cheaper.
Yeah, that's right. It absolutely is. I think the RACV's got a really good one. I can't think of the name at the moment, but they've got a really good one. And the other one that we find a lot of people on the road a lot use, so i.e. tradies and other sales reps, etc., is 7-Eleven's fuel app. So the fuel app, obviously we know fuel is in a cycle. There's got this feature in there that will lock the price of the fuel if it's cheap for 7 days. So doesn't matter what happens to the fuel price in the next 7 days, if you've locked your fuel price in the 7-Eleven app at the lowest end, they will honour that for 7 days. So you can save, I think the biggest saving we had on the tank for our fleet cars was about $25 just by locking in at the bottom of the fuel cycle.
Yeah, I was quite stunned at the difference within the same municipality and very close by. One of those frustrations of why, the argument of being, has the RBA really had a look around at what is causing inflation? And again, sadly, it's the people who can least afford the pain are the ones who are copping the most of it. It would appear again. Yes,
yeah, that's right, absolutely. Yeah, it just doesn't make sense.
No, it seems really odd. We can't do much about it from where we sit other than protest to local politicians, whatever the case may be. And as you said in an email to me, I wanted to ask you some questions about this, but as you correctly pointed out, you're not an economist, so you're not the right person to ask as to the reasoning behind these things. The cynic in me is pretty clear as to what the reasoning is, but we can only live with what we've got, and people really need to share ideas. Something you touched on before I hadn't really thought of was group buying. If you have a good circle of friends in a close neighbourhood and you did pool resources for grocery shopping, there's potentially a lot of money to be saved there as well, which I hadn't thought of.
Yeah, that's right. And I think that, we're seeing that at the moment, particularly with meats and, plate-to-plate type stuff, where, there'll be a farmer that, because of the change in sheep and cattle prices, there'll be a couple of families that are close to that farmer, and they'll go, look, if we go in and we pay you X, Y, Z per kilo, does it make sense for us to do this now, for you to hold an animal back and do this, now or in a couple of months rather than sending off to market for a loss? Perhaps you can make, the same amount of money by, processing the animal and sharing them amongst friends. That's an extreme of the matter, but the same applies to, ultra-large format warehouse purchasing, things like that. So it definitely does make a difference.
And one of the other tough decisions, of course, we had a nutritionist on about 3 weeks ago talking about that when you get tough, you start to buy cheaply, which affects the diet and has issues then with family health potentially. So you don't really want to be, particularly with your children, you don't want to see them short just because the budget's tight, and a group purchase model really could be a way to get around that.
Yes, absolutely. It makes sense for families, and it perhaps allows, where fruit and vegetables and fresh might be outpriced, maybe it brings that back within the range of ability to purchase because of cost.
Chris, house prices is something you probably do know a little bit about. Do you think this is going to have an effect on property pricing in the future, that some people may be able to get into the market again that they perhaps couldn't have afforded to?
Yeah, look, I think that, from what we're hearing where we are, I think that it's more of a plateau of pricing at the moment. Perhaps maybe, it might come back 5 or 10%, but it's certainly not going to crash, and it's certainly, I wouldn't have thought, about to take off either based on the buying capacity changes we're seeing. So, I would say absolutely that, it is, it's possible for those that couldn't get into the market when things were ultra cheap, they may be able to enter the market now. Despite
the fact that there's not a lot of money at the bottom end of the socio-economic, environment. There certainly still seems to be plenty at the top. Has there been an easing with the people in the market buying their fifth, sixth and seventh home?
Oh, yeah, absolutely. Yes, for sure. In fact, if anything, a complete reversal because of, accountant tax implications and other implications. I don't believe that, people are in mega acquisition mode of, monopoly style of building a property portfolio. If anything, they're looking to reduce it because rental yields and loan costs aren't really lining up, and talk of changes with how much tax they'll be paying because of being property investors is altering behaviour as well. So I wouldn't have thought that there'd be very many people that are in high acquisition mode at all.
And I suppose the equity factor that was used very successfully in the ridiculously fast increasing house prices was a thing that got people set up, but I suppose there'd be limited equity as some property values have plateaued at least, and some even dropping back.
Yeah, there is, and we see, we see valuations slipping a little bit from time to time, and yeah, the equity certainly isn't as fast and free as it used to be.
So, Chris, there was a wording in email that you sent to me. Don't panic. We're not at that stage yet where we need to, and you're reasonably confident that better waters are ahead. It's just a matter of having those tough conversations at home and riding out the next 4 to 6 months and then review it, because I would hate to think that we would be living through. Well, the economists are talking about one more, but you'd be stunned if there was going to be another 2 or 3 rate rises early next year.
Oh, I think I'd put the door on the clothesline on our door if that happened. But I just don't see it happening. There are people that it's becoming seriously problematic for, and I don't think that that if things keep going up, that it makes sense to keep putting them up. I think that, I'm not here to talk about economic policy or government policy, but there's got to be another way apart from the RBA just jamming a handbrake on and, increasing rates. Yeah,
I think that's wise advice. Chris, thank you so much again for your assistance this morning. The message is don't panic, but you need to look long and hard if you are struggling. There's some more tips. There's credit card bonus points, there's shopping around for fuel, there's buying in family or friend groups to save money. But important thing is don't panic, there will be better waters ahead. Chris Foster-Ramsay, thank you so much for your time this morning. We look forward to talking to you again.
No worries at all. Thanks for having me on, Rob.
Good.